And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, September 1st, 2021. Well, I did finally go back, review all of my work and labeling back on the weekly chart and then again on the daily chart. And the reason that I finally broke down and did this is because the market continues to consolidate and hang out at much higher levels than what I would expect to hold if indeed the B wave had ended here. Then the C wave should not be hanging out and taking its time. It would start pretty much immediately, and that level would have been rejected and the market would just head lower. Now, so what does it now tell me? Well, what I've done is I've expanded and I've put the minor third wave here. So that's minor 3 of intermediate 5. And then the fourth wave, because this is an ABC, is minor 4. So minor 4 ended here rather than here, I think it was before. And so now we're in a minor 5th wave advance instead of a irregular B wave. So what does that say for us now? With inside this minor 5th wave, we have 5 waves of minute degree. With that, we have minute 1, 2, 3. So we have the Globex high on Monday, actually Monday to Tuesday, at 40.42.25. That ended minute wave 3. So I think we're still within a minute 4th wave correction. And if I just run, I can actually just put them back up. Text note, do an edit text note. Okay. So let's leave that alone and go back, and now I'll just do it. So we're going to put the retracements for a minute 4th wave. Now, the most common relationship is that it will be 0.382. The pullback will be about 38% of that 3rd wave. But that brings us all the way down to 44.77. The market is consolidating and holding much, much higher. So the next one up would be the 0.236. That's also very workable, and that comes in at 45.02. So we remain above 4,500, and that keeps in line with, I think, the undertone in the market right now. I don't see them breaking down. Every time they try to break down, the buyers come right back in, and they swarm back in, and it breaks down, and they come back in. And that's been going on now since that high. So that couple of things, it tells me that there's underlying support here in the market from the buy side, and that we should be expecting additional highs above 45.42. So now the C wave down, this is pretty much ending up being a fairly flat correction. So I would look for it to come down and maybe hold above 45.12, maybe get down to 45.10, maybe get down to 45.02. But I'm not going to hold my breath on that. As long as it comes down and either equals 45.12 or actually even ends in a failure, as long as I can count 5 waves down off of this level, which would cover the C wave, then that would be a complete structure for me. In fact, I'll take this down to the 30 and let's just take a peek inside of it. So here we have, that would be the end of a minute 3. And this is A, and then we have a B, and then 1, 2, 3, and then 4. It's awfully big. So it could have completed here at 19.25. Now, if that's the case, then we're going to be moving quite strongly to the upside, and likely before all is said and done, we'll be at new highs before we're breaking 4,500. Now, I'm going to take that particular Fibonacci retracements away. And now I want to put on an extension, and I'm just going to use this level, 4512, as a gauge to where this minute fifth wave has a chance of getting to. So I've already done for the minor fifth wave. Let me go back to the hourly chart. So for the minor fifth, this is minor fourth. So for the minor fifth wave, I've already put that down. And so those are going to be here on the inside. These outside are for the intermediate fifth. And so that would be, again, we sit above the 0.236. The 0.382 level comes in at 46.77. So let's see, by adding an additional layer for this minute fourth wave. So again, we're going to run this time extensions. And we're going to take that from the bottom of wave 2. Thank you. Thank you. And to that top at 42, 42, 25. And then we're going to take it down to this low, which was at 42, 12, 50. Okay. So let's start to open this up a little bit and let's see what we come up with. The first reading that we're getting is that minor wave 5 would be equal to minor wave 3 at 45.73. We've already looked at that one. Minute wave 5 would be equal to 0.618 of the distance of minute 3 at 46.18. So once again, we're getting a big cluster above 4,600. And so even though it could end here, it could end here, it could end here. All we really want us now is to calculate and track 5 waves up from wherever this fourth wave ends. I'm estimating that it'll come back down towards 45.12. We'll readjust if it goes below or if it fails above. We can readjust those numbers, and it's not going to be much because right now this low is only $4 above this low, and 45.02, which was at 0.236 retracement, is just actually $10 below. So not a whole big difference. So wave 5, these are the levels. And now we can see that if they can really, if they want to get this thing going, which it just seems that if you're looking at the NASDAQ just knows no bounds up here. The NASDAQ is just continuing to fly. In fact, it almost got to 15,700 today on the opening. That just kind of ran and took it all the way up there. And it's like, okay, it did pull back, but still the buyers are coming in. And again, they're really kind of piling on in Apple and Amazon and Facebook and Google, Microsoft. Today, Netflix and NVIDIA got added to that. So it depends on the day, or they're just really coming in and pushing against stocks. So I'm actually thinking that we're probably going to get this done maybe in the next couple of days. It'll be surprising if they want to hold the highs until after Labor Day, but that could very well be the case. So right now, the preferred count's going to be that we're expecting additional new highs above 45.42.25. We get close. We got close again this afternoon. We got up to 39. I think it actually got up to 40, and then it pulled back. And as long as I can, let me get this down, just open this up again. All right, so if I take it from here and let's open this up. If indeed this did complete it, and this, oh God, there you go. If this completed that little fourth wave, and then we have 1, 2, 3, 4, 5, and this is wave 1 of 5, ABC, wave 2 of 5, then I would definitely expect it tomorrow we just start to blast. We just start to go up. And then they start within when the Asian markets open or within the European markets opening and trading session. We could get another boost. And if indeed that's going to be the end of 4, which it could be, then this would be 1 of 5, 2 of 5, and then we're going to go in the third wave. Again, third waves are the longest and the strongest. So in anticipation of this happening, it's like it's all very possible, as is actually the previous count that I had there that I changed today. It's not unusual in my case that the market will linger. I'll put a different count up and bam, it goes back the other one and begins to slide lower like there was no tomorrow. If that happens, we know we can change this back. Not that all cases are interchangeable. As long as I'm not breaking any rules when I change the labeling, then it all still is acceptable within the guidelines and the rules of the wave principle. So again, the same thing would happen here. As long as we're not breaking any rules, the guidelines would allow for the fluidity of an ongoing count to be shifted back and forth and to be more relevant in saying what the market is actually telling us. And at several points, the market was telling us that that was it. And then they started to go down, then it stopped and they started to go up. So it's not that I, as an Elliott analyst, am wrong. It is that the market told me different. So I made the adjustment. At first, I thought, okay, I can allow for an A and then an irregular B wave, and it still might be. Don't forget that that 1.618 on an irregular level comes in at 45.65. So it could get all the way up there. That's going to be another new high. But if it does it in 5 waves, then then I can leave a discount, or I can interchange them. So it's not really going to change the outcome either way. The extension up, which we would have to allow, that this would have been changed, and we would still be looking for a top of a C wave. And now, but we're allowing for an additional rally up to that level. And being that it got very close today, if this was a C wave, that's not going to hang out and go back up there and test it twice. The C wave would be kicking right in and it would be all over. But if the C wave still has more to go and that level is going to be 45.65, well, as long as I can count 5 waves up when it gets up there. But now we've got higher levels. It's not even that much more, even that much higher. Another $8 up to this 100% level, where minor 5 would equal minor 5 would equal minor 3 at that level. Sure. And then we have additional coverage if it gets a little bit higher. If it goes up here, then we still have 1.236. It is all acceptable. It's all acceptable under Elliott. We're not breaking any rules, and it's just that the market is extending. And quite often you don't see that until after the event. So after the market actually puts something in, then you're going to see more clearly what exactly it was. And quite often that does happen within a corrective move, which, if I left this all as the ending point for all of the sequences, and this was just an irregular ABC, and this is the B wave, then it would still could be able to get up here and be done. But actually it was right here. Right at 45. Right now we have 45.52 is going to be some resistance, and that would be where minute wave 5 would be equal to 0.236 of wave 3. At 45.52, that's a new high. If I can count 5 waves up, it works. That's the key. That's what I'm trying to tell you. So if this is going to be the end of this small minute 4th wave, then this is a sub minute 1 of 5, sub minute 2 of 5, and then we get a dynamic 3rd wave. And if it goes up and then comes down and goes up, and I can count 5 from that low, if indeed that's where I'm going to put it, then yeah, deal's over, deal's done. So then that would work. So for tomorrow, I actually think that it still will be shallow to the downside unless it starts to break below 45.12 and then again below 4,500, and then it has to break below the 200-day moving average for this to really kick in and get itself going to the downside. Right now, it's all been held by that 50. It played around the 50. It even played around the 50 into the close. And this is on the hourly chart. So when it continues to just play around these numbers, and the 50 has been broken, that does show some weakness. We are kind of walking ourselves a little bit lower. And it's okay, it works. But here again, if I had to look on my hourly, 1, 2, R, A, B, and then we get a C, and then a launch. This still kind of is an A wave, A, B, C, a B wave, 1, 2, 3, 4, 5. Let's see, that went too high. So it gets very complicated in terms of how do we allow the count and what do we do? So I'm going to just stand back and let the market tell me, and then I'll fill in the blanks, and then we'll know to go on. But for tomorrow, I will suspect that I think that the market will continue to hold higher and likely move higher. Again, we're really operating under pretty thin volumes, so it takes a while, and then suddenly there's just a move or somebody comes in with a larger order and moves the market around. But primarily they're pretty low volumes. If we do start to break down, like I said, we have to break below that level, which is 45.14. So we're already breaking the 200 before we would break that low. But that's going to start to demonstrate weakness in the market on the 30-minute chart. And if I go out to the hourly chart and it breaks below 44.94, that's going to demonstrate weakness on an hourly basis. And we can keep going up. And you can see where things are and where we would be getting confirmation of all of this. Right now, we still haven't even broken below the daily 4. There's the daily 8. There's the daily 20. There's the daily 50. This slide lower, it got close. It got close to moving below that daily 50, and that would have given us a much stronger signal that we are going to continue to move lower. Because before that was where I had marked all the highs, and this would have been a wave 1 coming down, but it didn't. It held and they marched higher. So again, that's what these, if we start breaking these, it's starting to demonstrate weakness in the market, and this would be on a daily level. And each time you can go out to the next level up, which would be the weekly, and you can look there. If it's going to continue to break down, if it starts breaking through these daily moving averages, particularly like the 20, and then the 50 at 43.91, we got some weakness on our hands, particularly if it's falling from up here. That would be over 100 S&P points. That would be a pretty big drop for the S&P. We've seen it in the past. It can happen again. So tomorrow, continued thin markets, I would say. So volumes will be low. I think if we get a down move, it should be held pretty much at our lows that we saw today, which are 19, maybe down to 12. I would not think any lower than 4,500. And then we start to rally again. If we rally from this, we need to first, we're going to break above 35. Then we're going to break above 39. Then we have to break above 42. And then we head up to 53 and then 73 to 78. That's where I'm going to leave it for right now. And the next update will be Thursday, September 2nd.